Hello everyone and welcome to the Palumbo Pulse video edition, where our goal is to be the voice of reason, where we take the complicated of the markets and break it down as simple as possible for you. Before we begin today, our thoughts and prayers are with the brave men and women of the U.S. involved in the conflict, as well as innocent civilians whose lives are being affected by this war. So from an investment standpoint, what does war mean to our economy and markets, and what are the main risks? Well, during every war, the major risk is the spike in the price of oil. If oil were to double or move significantly higher from here, that historically has been one of the triggers that can push the global economy into a recession. And during recessions, the S&P 500 historically declines anywhere from 20 to 25% or greater. So watching the price of oil is extremely important in this environment. And one of the key areas that we're observing is in the Strait of Hormuz, which right now has become somewhat like of a parking lot for ships, as many vessels are hesitant for obvious reasons to pass through. Well, that area is critical because roughly 20 to 25% of the world's oil and natural gas flows through that single passageway. So if that flow were to be significantly disrupted, it would place upward pressure on oil prices like we're seeing. But nonetheless, oil remains the most important variable to watch. The second risk is supply chain disruption. During COVID, we saw how fragile our global supply chains can be. If geopolitical tensions begin to disrupt shipping lanes or trade routes, that can slow economic activity and, most importantly, potentially create new inflationary pressures. The third risk is fiscal risk. Wars are very expensive. The United States entered this conflict with a deficit approaching $1.5 trillion and historically has high levels of debt. If the conflict were to extend significantly beyond the timeline currently being discussed, that could put additional strain on our government finances, which is one reason why rates are starting to move higher. So what are markets actually doing? The market had actually been declining leading into this conflict before we knew a war would develop. Markets tend to look forward, and in the weeks leading up to this event, we saw investors moving towards defensive sectors such as consumer staples and other defensive stocks. However, since the war began, we've seen a shift towards riskier assets. Capital has started flowing back into riskier assets like cryptocurrency and many of the Mag 7 technology companies. So that market behavior may suggest that investors believe this conflict could ultimately be relatively short in duration. So what's the reality that we are facing? Well, one of the things I often say is that we are currently dealing with what I call a known unknown. We know there's a war, but we do not know is how long this conflict will last. And trying to predict that is impossible. What we can do is continue observing the data, monitoring markets carefully, and identifying opportunities that can emerge during periods of volatility, which is important. So to conclude, in times like these, clarity matters more than ever. Our goal is to separate signal from noise and continue being a voice of reason for you. We'll continue to monitoring developments closely and we'll keep you informed. If you have any questions or concerns, as always, please contact us as we're here for you. Remember, the world has faced many difficult chapters before, and every single one of them eventually turned the page. Thank you for our continued trust in our firm.